Welcome to Earnings Central. In this video, we'll break down Lennar's fourth quarter fiscal 2024 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q4 was $10.06 billion. The company actually reported revenue of $9.95 billion, missing expectations by 1.1%. This quarterly revenue also marked a 9.3% decrease compared to the $10.97 billion reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q4 was $4.15. The company actually reported an EPS of $4.06, falling short of expectations by 2.2%. This result also reflects a 15.8% decrease compared to the $4.82 reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. Lennar's fourth quarter new orders came in at 16,895 homes, which was below their initial target of 19,000 homes. This shortfall reflects the challenging market conditions they faced as mortgage rates increased during the quarter. The company's gross margin declined to 22.1%, missing their expected target of 22.5%, primarily due to increased incentives needed to drive sales. Despite these challenges, Lennar maintained a strong financial position. They ended the quarter with $4.7 billion in cash, demonstrating their ability to generate substantial cash flow even in a difficult environment. Their debt-to-capital ratio improved to 7.5%, which is actually their lowest level ever, and shows their commitment to maintaining a strong balance sheet. The company continued their share repurchase program, buying back $521 million worth of stock in the fourth quarter alone. This brings their total buybacks for the year to over $2 billion, showing confidence in their long-term outlook. Additionally, Lennar grew their community count by 15% year-over-year, ending at 1,447 communities, which positions them well for future growth. Now, let's shift focus to some of the key insights and takeaways from the earnings call. First, higher mortgage rates significantly impacted buyer demand in Q4. As rates approached 7%, Lennar had to increase incentives and price adjustments to maintain sales momentum. This led to their strategy of using margins as a lever to maintain sales volume, essentially accepting lower profitability to keep homes moving. An interesting development is Lennar's focus on their core product strategy. They plan to increase these standardized home designs from 10% to 33% of their starts in 2025. This standardization helps reduce costs and improve efficiency across their supply chain. The company is also nearing completion of their Millrose Properties spinoff, which will become the first publicly listed land banking arm. This is a significant step in Lennar's transformation to an asset-light business model, as Millrose will provide just-in-time delivery of developed home sites to Lennar and other builders. Another major development is their acquisition of Rausch Coleman Homes, which will add approximately 4,000 units to their 2025 delivery target. This acquisition gives them entry into new markets in Arkansas, Kansas, and Missouri, while also strengthening their presence in existing markets. Despite industry concerns about potential cost pressures, Lennar reported that their supply chain remains efficient. They've successfully shifted away from Chinese manufacturing over the past 8 years, which helps minimize their exposure to potential tariff increases. They've also maintained strong relationships with their trade partners, helping them keep construction costs stable even in an inflationary environment. Looking ahead to 2025, Lennar expects to deliver between 86,000 and 88,000 homes, representing 8 to 10% growth over 2024. While they acknowledge near-term challenges with affordability and interest rates, they remain optimistic about the long-term outlook, citing the persistent shortage of housing supply and their strong market position. That wraps up our recap of Lennar's fourth quarter fiscal 2024 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.